All right, guys, last week, all three indices were down, S&P, Dow, NASDAQ. Remember, the goal of this channel is to teach you to be calm when things are going poorly and also to teach you to be calm when things are going well. That might sound counterintuitive, but our goal is to make sure that price and value match. If you don't know what I'm saying there, what I mean is usually stock prices, news follows the stock price. So if a stock is flying high, the news will report all the good things about the stock market, etc. When things are falling, all the news is going to do is talk about the bad things. So we're here to take away all the BS and say fundamentally what's going on. So last week, the S&P was down 2.42%. The Dow was down 1.95%, and the NASDAQ, the tech-heavy NASDAQ, which is up 1.4 billion percent this year, it was down 3.04%.
Wow.
Today, to start the week off, the S&P and Dow have some gains, but the NASDAQ is continuing on with its losses. Tesla just announced today that their CFO of 13 years is leaving, so the stock is down over 3%. Does that matter or not? I don't know, but people like to make dramatic responses to news. Why are you laughing, Mo?
I just put a tweet out that said, I had a question for all you hype dorks out there. Can you please enlighten me to the percentage fall that Tesla will have once Elon Musk undergoes surgery?
What surgery is he getting?
He hurt himself. He hurt his neck doing sumo wrestling or something.
Is this part of his BS against Zuckerberg?
I don't know.
Did you see what
He's getting an
Zuckerberg
MRI
said?
tomorrow.
Did you see what Zuckerberg said?
No.
He said something like, funding. He made a joke about his funding secure tweet because Zuckerberg's like, I'm ready, and I haven't heard back from
That's funny.
from Elon. So, guys, Mo and I are both on Twitter. We're very active. Here's my Twitter account at Paul Gabriel. Follow us on follow Mo at Real Mustafa H, and our YouTube account is eMoney YouTube. Is that what it is? Yeah, I always forget because we just changed it. eMoney YouTube is our Instagram, our Twitter account. I really like to engage with people about economic and financial topics. It's a lot of fun. I think Twitter's great. I only joined last year and I already have over 1,500 tweets. This screenshot's a little bit old, but it's going pretty well. So anyhow, back to the markets this last week. Guys, on any week-to-week basis, it's essentially a 50% chance the market goes up versus down. It's a roll of the dice. And remember, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. You've heard this before, and if you haven't, here's what that means. In the short run, if people love a stock or an investment, what's going to happen to the price? It's going to go up.
It's gonna go up.
They don't like it, what's going to happen to the price?
Goes down.
Go down. But in the long run, what's going to matter is the fundamentals of the investment. Correct? Mm-hmm. You know, Mo, we talk a lot about the stock market to GDP ratio and the 10-year cyclically adjusted PE ratio. What this does, guys, is it takes the value. Warren Buffett says the stock market to GDP ratio at any given moment is probably the best reliable indicator of value. And of course, a lot of people out there when stocks are overpriced and overhyped say why these indicators don't matter anymore. And on our community, every morning, I report the most recent stock market to GDP ratio. So let me show you guys what I reported this morning. For Friday's close, the stock market GDP ratio was 81.2% overvalued. And everybody out there says it doesn't matter anymore. That metric doesn't matter. Guys, money made in this country versus overseas is like a 1% difference. But look at this. The 10-year PE ratio is 81.3% overvalued. This actually just takes the 10 years of the earnings of the S&P and factors it into today using inflation and then divides the stock market price by this. The historical average here is 17. It's currently at 30.89. And it does not matter where those earnings are earned. Mm-hmm. All that matters is the company's earnings, all the S&P 500 company earnings. This goes back to both of these go back to 1929. The average here for the 10-year PE is 17. The average for GDP is about 0.93. 1.69 versus 0.93, 30.89 versus 17. They're just overvalued. But it's hard to see that because we've been in a bull market since March of 2009, essentially. Yes, we had last year, and I get that. But a lot of people are saying this is a new bull market.
Maybe.
Maybe it is. Great response, Mo. Maybe. But you look at what's happened since the beginning of the year. AI, right? Where they're even talking about, by the way, did you see PayPal today, what they announced? They're doing a PayPal coin now, a stable coin attached to the US dollar. That's how popular PayPal is. It's a very popular conversation because it was at a peak of $310 just 2 or 3 years ago. Now it's at $63 a share. Guys, look at that as a prime example. Let's pull up PayPal. I want to show you guys PayPal's hype. Look at this chart for PayPal in the last 5 years. It hit a peak of $310 on July 26th, 2021. That is a little over 2 years ago. And the low on May 26th was 59 bucks. If I told you around this time that what we were telling you was a stock we thought was worth way lower, went to 59 bucks in under 2 years. And now, guess what? When I talk about PayPal on Twitter, what do I get? Paul, we don't get on all of this. Okay, sounds good. What I don't get is this company's still growing and revenue is still growing, profit's still growing. Their number of transactions is still growing. Is there more competition? Absolutely. But by the way, did you see Jeremy from Financial Education? Somebody tweeted at us and said, when Mo and Paul are interested in stock, it's something to pay attention to. He put laughing faces, and I just put TTCF. That was my only response to him.
That's what Jeremy said?
Yeah, he did that. So the guy who claimed that he was a value investor, and he said he learned from me.
And Planet 13 and all of these nonsense things.
Guys, you got to remember, I'm never, ever going to have companies that I buy at the bottom. And you probably will never have that happen either.
And if it happens, it's luck.
And if it happens, by the way, I bought Southwest at 25 bucks and it went up straight from there and has not been below that. But guess what, guys? That's not very likely. So you got to remember, that's why on this channel, we're trying to teach understanding fundamentals. Because if you buy a company based on good fundamentals, with good pricing. We did a great interview with Professor Aswaf, and he said a great statement the other day. He said a story without the numbers is just a fairy tale, and a number without the stories is just a spreadsheet. It's about combining the two. But what we find is that most investors just focus on the story. And a lot of people think we just focus on the numbers, which I can understand that bias. People thinking, oh, you just care about the numbers. No. What I care about is the story dictating the numbers, and I'm not willing to overpay for the story. Right, Mo?
Yep.
So we look at AI, Mo. We look at the market since the beginning of the year. What's driven this?
News.
Story.
Hype. Story.
Exactly. That's all it is.
Because honestly, there's nothing, everything, except for the Chat GPT, there is good AI out there right now.
And it's getting better. It's going to get better.
And it's getting better. But everything's flying on promise of what it will be.
Well, that's the interesting part. When you have this hope and desire to see the future being great, you're going to build up in your head. And that's why I tell even Dalton, the guy who does research for us, I always tell him, Dalton, just don't get too immersed in it where you find yourself like forcing yourself to give yourself a higher value because you become so immersed in the story.
And even if every single thing, let's pretend every single thing that they're talking about in promise comes out for AI and it works, is this the right price to pay for it?
Look at the internet. Look at the internet 23 years ago. The internet's probably bigger than we all thought it was going to be. But how many internet companies went to zero? The vast majority. Yeah. And for those of you who sit there and say, well, not Amazon, you're right. But remember, Amazon went from a peak of $113 down to $6 in a matter of less than 2 years. So even Amazon that made it still fell 95%. So again, on this channel, what we're trying to do is just teach people that every investment is the present value of all future cash flow. And your goal should be to understand what you're buying and be able to assign a price to it and be okay not owning. That's very important. Yeah. It's okay to say, I don't want to have this company. You know, people say to me like, don't you feel bad that you missed out on NVIDIA? No, it made no sense to me back then. It makes no sense to me now. Why am I upset?
It makes less sense now.
It makes way less sense now. Way less sense. You know, I was reading this book about YouTube and all these things. And in the book, it's over 3 years old almost. They're talking about AI. They talk about all of YouTube's AI. Yeah. So I look at this saying, guys, AI has been around.
Just because it's been around and it hasn't been talked about in the mainstream media doesn't mean that you just go and buy it.
It's the current hype.
Yeah.
Just like electric vehicles and marijuana and all these things were the hype. And guess what? Soon, I don't know when, we'll stop talking about AI and we'll start talking about the next big boom, the next big hype. Mm-hmm. That's all we're trying to do here is just understand, guys, just be apprehensive about overhyped things. When things rise parabolically, just be a little concerned about that. You know, you look at a company like Tesla. Look at Tesla. I just want to show people Tesla, how it's currently at 247. And the first time it hit 247 was in January of 2021, 2.5 years ago. That was the first time it hit 247. 2.5 years, it's basically done nothing. Now, I don't mean that to say, but look at the financials of the company. Look at how it's done since then. It's over doubled its revenue. Over doubled. So I want to sit there and remind people that all of a sudden the hype, and by the way, people still love Tesla, and I don't think Tesla is going under. I think it's probably going to be around for a very long time. But the question is the story justifying the price? Is the price justifying the story? These things have to work together. It's not just about one or the other. It's about both of them together. And that's all we're trying to do here. So if you like that, two things. One thing I want you to do for me, subscribe to the channel. Very simply, just subscribe to the channel and put the bell on so that you get notifications of our videos, because we're going to get better and better about this. So guys, thank you very much for coming along this. And that's it. Thank you. Bye. Thank you. Even though you guys were talking